All right, guys, back to work. Back to work. Hope you guys had a fantastic weekend. Time to get back to work. One more day left in the month of April. And boy, oh boy, we have a slingshot breakout setting up right now on the charts in front of me. Anytime we see a slingshot breakout, there are three specific trade setups, trade triggers I look for the following day. I'm going to cover those in a lot more detail tonight. I want you guys to have an easy roadmap to make some money tomorrow as well. Before we jump in, though, I want to talk my favorite trades for the final day of the month of April. Make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section. Thank you so much for tuning in, supporting the channel. Enough of the intro though, Joe. Let's make some money on the final day of the month of April. I can't believe we're talking about the 30th day of April coming in hot for tomorrow. Charts are already here tonight, as you can see. NASDAQ, of course, triple Qs are ready. Oh, we got the S&P and the SPY in front of us. I have three really, I think, important clues right now on these charts that are telling me where the winning trades, the best entries, the best exits are going to be for tomorrow. I have one of those three important clues is on this time frame right in front of us. We are bullish, as you can see right now, on the 60-minute time frame. What a difference. A couple days makes buyers rebounding after the Microsoft Google announcement came out last week, and buyers have all of the control on this higher time frame, the 60-minute time frame. Now, the 60-minute chart is great at giving us the overall directional bias. That will tell us where the odds are stacked in our favor for tomorrow. But the one thing the 60-minute chart does not give us is entries, right? The entries are a little bit more difficult. The direction is kind of the easy part. We'll talk about two more important clues and how to time the best entries here in a moment. Before we do that, though, let's check our schedule for tomorrow first, though, because, boy, there's a lot going on for tomorrow. There are four things on my radar for tomorrow. The first thing is the end of the month. As I mentioned earlier, we got one more day left in the month. Why is it important? Well, into the end of the month, traders do things they wouldn't normally do at the beginning of the month. And so because of that, we oftentimes get a big uptick in volatility. End of the month, next 2 days, right? Next 2 days, the end of the month tomorrow and the first of the month on Wednesday. We always get, well, I shouldn't say always, we expect to get an uptick in volatility as traders do things. They get desperate. There's scarcity involved at the end of the month. It's the first thing on my radar for tomorrow. How about some news for tomorrow? We get the employment cost index tomorrow at 8:30 Eastern time. That is a decent sized number for tomorrow. Definitely on my radar at 8:30 Eastern time. But I think the biggest news of the morning tomorrow is the consumer confidence number coming out at 10 o'clock Eastern time. I always want to pay attention anytime I see news at 10 o'clock Eastern time. And then, of course, later on in the session tomorrow night, we've got more big earnings. Tomorrow we get the Amazon and AMD. I'm sure most of us know Amazon and AMD, of course, AMD being a front runner in the hunt for AI domination. And of course, Amazon, of course, is Amazon. Everybody knows how big important that number is for tomorrow. But remember, the last couple hours of the session before that number comes out tomorrow, be careful the last few hours of the day tomorrow with big earnings coming out after the close. And tomorrow night, we'll talk about a trade, the reaction to that coming in on Wednesday, May the 1st. So again, end of the month volatility, ECI at 8:30 Eastern time, consumer confidence at 10 o'clock Eastern time, and we got big Amazon and AMD earnings after the close. Be careful the last couple hours of the session tomorrow afternoon. Now let's get back to our charts though, because it's good to know when the news is, but the money is made on the chart. So now let's go over my favorite trades here for tomorrow. We'll dive into these charts right now. We'll start first in the S&P and SPY, finish up the job tonight on the NASDAQ and the triple Qs. As I mentioned earlier, there are three important clues right now on these charts telling us how to make money tomorrow on Tuesday morning. One of the clues is this bullish directional bias we see right now on the 60-minute time frame. But again, we don't trade off a 60-minute. We don't trade off time charts at all in our trade room. I think tick charts, because pattern recognition is so much easier on tick charts, and because patterns are a big big part of how I trade. I like to use tick charts in our trade room. This, of course, is a 7,000 tick chart. All the time frames are up there in the upper left-hand corner. And this, my friends, is the 21 EMA, just in case you're watching for the first time tonight. There are two more important clues we have here on this tick chart. The most important clue is this range right in the middle of that chart. Now, if you're taking my free video classes, you know how important ranges are. Two things about ranges. Ranges are magnets, and they love to rotate back and forth. They'll rotate down, up, down, up, down, up. And of course, because of that rotation, we can buy low, we can sell high, and because of course we are overall bullish right now, buying low is a bit better odds than selling high. But I think though, because of the second clue on this is pretty important. And that is that measured move that you see there up top. Now, why is that important? Well, if you watch the videos last week we had that big Microsoft Google announcement that pretty much gave the buyers control of momentum. We talked about how anytime you have a spike after news, we can use the size of that news spike, as we call it, and project it now going higher. And you can see right away, right, we're right up into now that measured move off the news spike earlier. Now, why is it important? Well, now put these two together. We're overall bullish. We get a range in front of us. We know that ranges love to rotate back and forth here. There are three ways to make money in a situation like this. One of them is a breakout pullback, right? We know that as the market rotates off the low of this trading range, this momentum becomes very, very strong. We're already pretty bullish overall on the 60-minute time frame. I call these, my nickname for these are called slingshots, right? A slingshot breakout, if you will. A lot of times, again, that momentum builds so strong off of that low. One of the ways I look to trade this for tomorrow, it is a breakout and a pullback. We use the top of that trading range as an area of key support. We slingshot off that low and we buy the dip. Now, there are three specific types of entry tactics I like to use on a breakout pullback. We're going to talk about that here in a moment. That way you guys know how to time the perfect entry on a breakout pullback. That's one of three ways I can trade this for tomorrow. The second way, though, is to use that measured move, knowing that ranges are magnets. You know, we can probably look for a fake out breakout, right? A fake out breakout, the old FOBO off the high. Now, obviously, that is a very attractive trade, but it's a bit lower percentage because we're overall bullish. There are two types of entry patterns I look for to trade the fake out breakout. We'll cover that here in a moment. But first, though, why don't we cover first tonight, and we'll cover the breakout pullback. We'll cover the fake out breakout in a moment. Let's talk first, though, because we're right into there's a lot of resistance we're here right now, and we're pretty high up right now on the 60-minute. I wouldn't be surprised if we get knocked back a little bit, and buyers, I would imagine buyers are going to be looking for entries long around these three core areas: prior swing, trend line, and that big low here. Why don't we talk about, because there are three different entry tactics I'll be looking for tomorrow if we do get that kind of pullback before we finish off that rotation. We know where the buyers want to go. The buyers want to finish off this pendulum swing, right? The amount below the range, above the range. We may not go straight up into that area, though. We may get knocked back here. So let's talk about a couple examples there. And then later on in the video tonight, we'll talk about the move going higher, how to buy the breakout pullback, and of course, how to short that fake out breakout. This will be a masterclass on range trading here tonight on the video. Now, to buy a relatively shallow pullback right now, I'm still going to be buying relatively high, right? This is all pretty much major resistance above 51.50 and higher here. So if all I get is a shallow pullback here, I still want to be a buyer because, again, I still want to finish off that slingshot, finish off that rotation going higher, but I have to be careful here because I don't want to buy too high. That means the way I want to get into this trade long is to look for what we call a bear trap pattern. We teach these quite a bit in the free trading course, right? It's bears try once, it's a higher high, bears try twice. Once those bears try twice, now we know where their stops are, and we can use their stop losses to fuel this move going higher. Now, make sure you pay attention to this one. Again, it's a higher high in price. It will go right below that low. There'll be a nice big green signal candle closing above that 21 EMA. Again, we call these trap patterns inside the free trading course. I want to buy as low as I can, right? Because buyers want to buy low. And to do that in a shallow pullback, I always buy shallow pullbacks with traps. Now, things get a whole lot easier if we run down to that trend line, for example, or if we run down to that low at 51.18. See, down here, I'm not so worried about buying too high. We're now down around areas of support. The problem, though, is I don't have a crystal ball. I'm not going to blindly buy off that level because, for all I know, it'll keep on going lower. In that situation, I don't need a trap pattern. I wouldn't hate a trap. All I need here is a failure pattern. Now, again, in the free video class, we talk about the 2-try rule, right? The 2-try rule says bears once to go lower, bears twice to go lower. I think the easiest way to make consistent money is to trap traders like this and use stops to fuel your profit targets. This is called failure patterns. A 2-try failure, 1 and 2, trap those bears in, and then as we make our way higher, because again, it's a range, right? Ranges love to rotate back and forth. We know where the market wants to go higher right now. As it goes higher, let's go out now and look for one of those bear trap patterns. Now again, bear traps are very simple. They're a higher high in price, and you want to see us get a little bit below that prior swing. This would be a failure pattern. Again, trapping the bears in, using stops to fuel, and then as we go higher, it's that bear trap. You know me, I love traps, and I always want to buy trap patterns whenever I'm kind of worried about buying too high during that rotation. Now, let's slow down for a second because I know that most of you guys watching right now, you've taken my free video class, you've gone through the video course, you know traps, you know failures, you're making money with them on your own. But if you're watching for the first time right now, this might be a brand new language for you. This might be brand new to you. But don't you worry. I teach all these entry patterns. I have hundreds of examples of range rotations, traps, and failure patterns. I teach all of this in a lot more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that tells us exactly where the best winning trades are going to be each day. Then, of course, I want to help you start making money on your own. I'll teach you 4 of my favorite entry patterns. You'll learn failures. You'll definitely learn traps, pullback combinations, strength trades, and a whole lot more. The markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link that popped up there. Take that free course. It is perfect for someone trying to make the jump into full-time trading because it'll give you an easy roadmap so you always know where the best entries and exits are going to be each day. Also be aware too, I'm going to put all the important links, the description of the video here tonight. The free class links will be down there for you. Definitely start there. We trade together every day in our trade room at 8 o'clock Eastern time every morning. I'll put our membership, our trade room information, the description of the YouTube video as well. And also too, I post a lot of updates on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. All the details are there in the description of the YouTube video. But now you know where to learn more about all the traps, all the failures, and again, a lot more examples that we guys start making money with those on your own. Okay, now there's a few more variations of this that I want to explain to you. Again, in a moment, we'll talk about that breakout pullback. We'll talk about that fake out breakout because that fake out breakout could be a very lucrative trade for us tomorrow morning in our trade. We want to make sure you guys are ready for that a bit later on in the video. First things first, though. First things first, we talked about if we get that shallow pullback. We talked about if we get that deeper pullback. Now, oftentimes what happens is this. Oftentimes, because we're running into major resistance right now, oftentimes we'll get that strong shot down. We'll get those bears trapped in because, I mean, let's face it, right? That's a horrible spot to be a seller. You wouldn't want to sell at a support level underneath a bullish range like this, right? So a lot of times we'll get that two-try failure. The market will run up, but what happens is I like to, when I take these long trades like this, I almost always take profit at the underbelly of that range. I oftentimes will take my half off target right there. My stop, of course, moves up to my point of entry. And because the move down was so strong, sometimes what happens is we'll roll over and retest that low. Now, this is not a reversal. It's simply a retest. Anytime we see a strong move down like that, we oftentimes do pull back and retest. So I sometimes will get bounced out of that initial failure pattern I take. I'll have my one-to-one target already hit. We'll make money to trade, but again, it'll bounce me out there and go back and retest the low. We call these double bottom reversals. It's not a bearish reversal. I want to now go in now and do it again, right? Do it again. These can oftentimes be the more lucrative of the two. Trap the bears in again. Remember, it's a failure pattern. Trap the bears in below the moving average. 2 tries. Why 2 tries? Because I want their stops. I want those stops to be used as fuel to run higher. And again, as it does run higher and tries to complete that pendulum swing, that slingshot breakout going higher, we can then look for, was it again? It was that bear trap pattern. Remember this pattern again? It's a higher high in price, and it moved right below that low. You definitely want to learn this pattern, this little bear trap pattern. I got a lot more examples of this, of course, in the free video classes. But again, this is a double bottom. It's not a bearish reversal unless they really keep going quite a bit. And we'll cover that tomorrow morning, of course, in our trade room. But a lot of times, though, it'll run lower. We'll get our initial entry, take our initial profit. It will roll over, though, stop us out at point of entry, and then we'll do it again, right? 1 try, and then, of course, 2 tries into that failure pattern, trap pattern. And again, the target is back up to those highs, complete that pendulum, and then go higher from there. One last variation. I promise one last variation, and we'll cover price going higher here. I want to get that move down. I want to get those bears coming in, try once, try twice, and trap them in. But you know what? Overall bull market, there may be so many buyers down there, I may not get the entry signal. We may run lower, and we may just boing right back up into that trading range. These are a bit difficult on the emotions because what happens is you want to get the entry down here, but again, I can't pick the bottom. I'm not going to make the rookie mistake and blindly buy down there because the one time I do it, it'll keep on going and stop me out and blow my account, right? I want to do it that way. I want to wait here to see what happens here. And again, most of the time, they're going to pull back. They'll try a couple times. We can buy into those stop loss. However, though, if they V bottom off that low, right about when you start getting frustrated, at least I always do, right? When I start getting frustrated, we'll start grinding higher, okay? The grind is the giveaway, okay? Now, the hardest part about these is not chasing after it because that little voice in your head will make you want to chase this thing going higher. Don't chase it. Mark a trend line off the highs, bring it down off that low, and then watch closely. Look left. Find a prior swing that lines up around the low of that channel, and this is what we call the first test is the best test, right? The first test, of course, being off the low of that channel, right? That's the first test of the low of that channel. Now, I love traps, right? Traps always come in below prior swings. It could be a trap pattern like I'm showing you right here. We go below the moving average. Sometimes bears are foolish enough to try to short that thing off the 21 EMA. That's where failure patterns will trigger. Failure into pullback, pullback into strength. Of course, you'll learn more about those details, the terminology inside the free video course. But guys, if all we get is a V bottom off of that low, the hardest part is don't chase it going higher. Find that new channel and grab that first test. It could be a bear trap, a buyer failure pattern, a seller failure pattern, into a bullish pullback. pull back into strength trade. Again, you'll learn more of that inside the free video class. And again, we know where the market wants to go, right? It wants to rotate up here off of that low. Now we have my favorite way to trade this and some variations underneath this trading range. Now let's talk about if we go higher, right? Because there's plenty of ways to make money going higher on both sides of this market. Let's go to the NASDAQ here now. NASDAQ is very similar to the S&P, and of course, the NASDAQ gets a bit upset if I leave it lonely here for too long without talking about it here tonight. So over to the NASDAQ here, the NASDAQ, and of course, the triple Qs. We know the NASDAQ triple Qs are bullish overall. We talked about this quite a bit last night or last week on the video. Right now, the buyers are holding above the moving average. The bears are unable to hold below this. We know that means this market is a bull market. Go back and watch last week's newsletters on Wednesday, Thursday night. We did a bit more details on using moving averages to tell who has control of the trend on the 60-minute time frame. Again, we don't trade off the 60-minute time frame, though. We trade off of a tick chart. This, of course, is a 4,000 tick chart. The NASDAQ is a lot less volume than the S&P, which is why we use a faster tick chart. And we basically have the same basic clues. You'll notice there's that trading range right in front of us. The amount we go above it, the amount we go below it, the amount below it is the amount above it. We know that ranges love to rotate back and forth, up, down, up, down, up, down. Again, we know we can buy off the low, we can sell off the high. And again, we're an overall bull market, so there's a slight difference between how we buy off the low and how we sell off the high. I have to be a little more cautious selling off the high than I would be buying off the low. And then surprisingly enough, or I guess not that surprising, but the NASDAQ has already reached its news spike, right? So there is that news spike off the Microsoft and Google announcement we saw. What was that, late Thursday afternoon, right into Friday. And of course, now they've combined that with that right there. And there is your measured move news spike. No surprise, right? No surprise, see buyers taking profit and the price collapsing off that high. So the same idea applies here if we go lower. We still have the same three simple patterns or simple trades I'm looking for here in this scenario. Earlier on in the video, we talked about the shallow pullback traps, the deeper pullback failure into trap combinations. We talked about double bottoms. We talked about V bottoms. So everything we talked about before on the S&P can pretty much be applied exactly as it laid out on the NASDAQ as well. There are two more scenarios, of course. One is the breakout and the pullback. We'll talk about that here in a moment. And of course, the other one is that fake out breakout off that high. Because again, just like on the S&P, the NASDAQ is also running into quite a bit of overhead resistance as we try to fight our way back, taking back some of the price levels we lost earlier on in the year, specifically around the fallout there between Israel and Iran we saw a few weeks ago. Let's talk about the breakout pullback first. Let's talk about that breakout and that pullback. Now, first things first, in order for me to want to take a breakout pullback, I'm going to have to make sure we break through, convincingly through that pendulum swing, right? If all they do is run up to that pendulum, be ready for that short back down again. And again, there are two patterns we'll talk about to short this here in a moment. First things first, though, whenever I have a breakout pullback, there are three types of entries I always look for. On the way higher, it's always going to be a bear trap because, as always, I want to buy as low as I can. As we get up into what is usually a measured move, the breakout leg and the measuring leg, anytime we have a range breakout, the breakout leg is almost always a measuring leg. So once we reach the measured move up here, again, breakout leg, measuring leg, once we reach that measured move up there, we then expect to get that deep pullback into ultimately what was resistance becomes support. Now, that pullback, I always look for what's called a two-legged pullback. Now, two-legged pullbacks, we talk about measured moves in our free video classes. A measured move is a symmetrical, right? Basically A, B, C, D. Think about a measured move. But when I think about a two-legged pullback, I think about something that goes a little bit more than a measured move, right? A bit more than a measured move. That will give us the location to look for the buy. But as I always remind you guys, I'm not in the business of picking bottoms. I'm not going to blindly buy that level. It may roll all the way back over, and we'll talk about that here in more detail here in a moment. What I will do though is wait for the pullback. If these bears pull back and try once and try twice here, now we can use that same failure into, what was the pattern again? Bear trap combination we talked about a few moments ago on the S&P. So when I think about a breakout pullback, first things first, I have to get through that pendulum swing, right? That may not be easy, right? That's why I said earlier we may get an easier money trade on reversal back down again, which we'll talk about here in a moment. As we're going higher though, I want to buy as low as I can, right? Buy as low as I can. Now, I usually go half size position on trades like these because again, we're up into resistance, up overhead. But that's kind of the most aggressive way to do it is, it's a bear trap, right? It's a higher high in price, a trap below that low. Then again, think about that measured move that will tell you now where to take your profit and stop buying, right? Don't be buying and chasing going higher. Then we look left, we think about where were some prior highs. That becomes the general area in which I want to look for the breakout pullback. In my experience, most breakout pullbacks are two-legged, under the moving average, a bit more than a measured move, as mentioned earlier. Again, I'm not going to blindly buy the bottom right there. It may keep on rolling. What I'll do is once I see bears trying once and trying twice, now they're trapped, right? We're an overall bull market, strong breakout higher. The odds are stacked in our favor now to go back up and take out that high, trap those bears in with a failure pattern, a two-try failure. We teach that in the free video classes. And again, as always, that it's always going to be a bear trap pattern as we go higher because I want to buy as low as I can, and trap patterns are ideal for that. We covered that pattern, of course, in the free video course. So that is the two-legged pullback or the breakout pullback. I always look for that sequence: bear trap, two-legged pullback into a failure pattern, again into a bear trap pattern, continuing as we go higher. The most important thing is we have to get a very strong punch to that high, or else we're going to wind up collapsing back down into that trading range. Now, there are two ways I can sell that fake out breakout off the high. One of them is called a crown reversal. Now, crown reversals are very, very simple. They're basically bull traps. If I want to sell off the high right now, what is my challenge? There's always a challenge. It's either momentum or it's location. All right, there's always a challenge, okay? There's no free lunch in trading. Nothing is perfect. There's always a problem. There's always a challenge. The challenge is either momentum or location. If I want to sell off this high, it's a great location, right? On that resistance above a trading range. Ranges love to rotate. Ranges act like magnets. It's a fantastic location, but momentum is not on my side. Momentum is one of the most important variables that determines the type of trade we take. So because momentum is so bullish in this example and bullish overall, I can't pick that top. I have to counterbalance all of that momentum. To do that, we're going to use stop losses. We're going to wait for some rookies to come in, right? Because we all agree, right? This is not a good spot to buy. I don't want to buy into resistance up above a trading range, right? But I can almost guarantee there'll be buyers up here. There will be rookies up here who don't know any better, right? I was one of those rookies almost 20 years ago, right? I didn't know any better. I would see that strong breakout, I would buy into it. Once we see rookies try once and try twice, I'm going to use what is ultimately a bull trap pattern. It's a lower low in price. One try for the buyers, two try for the buyers. And what this crown reversal pattern does is it locks in those buyers, it traps in those buyers. Then we know where the stops are. We can use their stops as fuel because, again, we don't have momentum on our side. Momentum is too bullish. It's so bullish, an example. I need to trap those buyers in and use their stops to turn this thing over again. Also, too, in a pattern like this, I'm selling really high up here. Right, I need to sell really high in an overall bull market. Why? Because there could be a trend line coming in off this high, a channel right there. For all I know, we're going to get a bear trap right off that low and right back up again. Right? I need to be deep in the green on that trade by the time we touch the low of that possible channel. I do not want to sell this thing as it goes lower, because you short as it goes lower, I don't care what the range is. We're an overall bull market. So again, these crown reversal patterns, they do two things. One, they allow me to sell as high as possible. That way, if we don't get that full move all the way down, if all we get is a shallow move and then back up, I'm at least getting one target on that trade. I'm not getting run over like I would if I chased it going lower. And again, because we're going against the overall direction on this, I need those stops to fuel the move. I need that to give me some juice going back down in the opposite direction. Now, the other way to do this is, again, I love the idea of trapping in traders up here, but sometimes what happens is sometimes we run up, everybody takes their, like over here, right? Sometimes it pops up and rolls right back down again. If it V-tops, right? If it V-tops off that high, what's the giveaway? The giveaway is the grind, right? The grind. If we start seeing this thing take out that pendulum, and you'll see it. It'll get whacked right back down tomorrow morning. It'll get back below that moving average. And remember, once you see it grind down like that, don't chase it. Do not chase it running lower, because the reason why it goes lower like that is because of profit taking, right? Eventually, the sellers will want to come back in. And when they do, they're going to want to sell nice and high. So you draw a trend line off the lows, up around that high, right? Look left, find some prior swings. And again, you want that first test off the high of that channel. We talked about this a few moments ago on the S&P. If it runs lower and gets whacked right back up again, it begins grinding back up. Same thing. Find that grinder, find that channel, find that prior swing, and don't miss the first test off the low of that channel. Same idea. We go up, we get whacked back down again. We don't chase after it, because again, when you chase after it down here, you're trading right along with the rookies out there, chasing it lower. Eventually, those bears will want to come back in. And when they do, they'll be hunting for the high of that channel. Get that bull trap pattern above the prior high. Get that buyer failure pattern above the moving average, failure into pullback combination. And again, trade that rotation. We may find our way all the way down to that low tomorrow. Then what? Then what? Do we buy it blindly? No, we don't buy it blind. We don't sell it either. We trap the bears in, failure into that bear trap pattern combinations that we talked about earlier here on the S&P 500. All right, guys, that's the game plan to buy the breakout pullback. That's the game plan to short that fake out breakout. And now we've got the roadmap all covered. Now, tomorrow morning, don't forget, 8 o'clock Eastern time, the easiest way to start making consistent money in these markets, come out and learn this stuff and trade along with me every morning at the opening bell in our trade room. I'll put all the important links, the description of the YouTube video. If you're watching for the first time right now, definitely start with the free video classes. Learn the basic strategy. Start making money out there on your own. And some tells me I'll see you trading with us sometime soon here in the morning trade room as a brand new student at 8 o'clock Eastern time. Any questions, any trouble getting started, don't be afraid to call the office. Megan and I are always here to help out. And also, too, we got live chat. We get toll-free phone numbers. If you need help along the way, don't be a stranger. We're always here to help answer questions along the way. All right, guys, a fantastic day today. Been a great week, a great month of April so far. We got one more day left. Let's make some money, follow the game plan for tomorrow. In the meantime, we'll come back tomorrow night. We'll react to the Amazon and AMD earnings and put the plan together for a big Wednesday trading session, the first day of the month of May. In the meantime, be well out there. Be nice to each other out there tomorrow. And be here next time, will ya? Adios, amigos. Bye for now.